the customer base you just described, how as they adopt AI strategies, and they're going to need more computing power, therefore DigitalOcean is there for them. I mean, is that the obvious connection, or is there?
There's two connections. One is, as you described, which is the same way that we made cloud computing accessible to smaller customers, we're doing with AI. Like if you hear, like you're watching, the amount of capital that the hyperscalers are spending and some of the others that are in the industry spending, hundreds of millions and billions of dollars of capital, and they're selling to the hyperscalers who are using the AI compute capacity, and you've got all these frontier LLM models that are spending tons of capital. Those people are burning, those companies are burning tons of money investing in this. They have really extensive technology teams and a lot of expertise. Your average software developer and small technology company can't deal with that. They don't have the money. They don't have the expertise. They need it to be simple. They need it to be accessible. So we're providing AI compute capacity to those same customers in a much more digestible way. They can do it on demand. They can do it in much smaller kind of chunks of capacity. And so they can build them into their own applications. They can build AI capabilities. So that's kind of number one. But the second is we're going to use AI to make our service easier to consume. So imagine if you had a multi kind of country application running, and you had droplets, which is what we call our kind of unit of compute running in each of our different locations. And you just typed in, "Hey, my service is running slow. Can you tell me what's the problem, and please fix it?" Like if you could use AI to do that, and then that looks into the logs and figures out what's going on with your servers, and then makes a suggestion on how you might improve your the way your platform is operating, that's pretty compelling. And so we'll use it to both enhance the way we deliver our solution, and we'll make that technology available to all of the developers building on our platform so they can build it into their applications as well. It's a huge upside for us. Yeah, they're very clear. I mean, we need to get growth back. We're growing in the low teens. We need to get growth, up into the high teens or into the 20s. The market is growing 23%. We should be growing that fast. How we're going to do that is we're going to improve NDR, which is getting our existing customers to spend more with us, and the finance organization plays a big role in understanding what's going on with those customers and trying to identify those customers that have a higher propensity to buy. And so we're doing a lot of analytics work, working with the go-to-market organization. We're also spending on this new AI business. As I said, we grew ARR 200% in the second quarter, and there's a lot of investment that needs to go into that. And so, we're very focused on, okay, what's the right capital allocation strategy? And we're sitting on a ton of cash, and we generate a ton of cash, and what's the best use of that cash across buying back shares or repurchasing our debt or investing in AI capacity. So it's really about enabling the company to grow and doing it in a kind of cash flow optimized way and driving free cash flow per share, which is our anchor metric.
Matt Steinfort, thank you for joining us on CFO Thought Leader.
Jack, thank you very much. I enjoyed the conversation.